And now let's turn our attention over to the disruptors. George Tsilis is here, senior markets correspondent, taking a look at Palantir. William Blair upgrading this name that has been somewhat beaten down, whether it was profit taking or just down with tech. What happens here on Palantir today?
Yeah, I mean, obviously, Nicole, if you look at the stock in the last few weeks, it's down significantly. It was trading around $125 or so dollars. It's down about 30%. And obviously, there's a lot going on with federal government spending, the DOGE cuts that's affecting the expectations of the Department of Defense contracts that Palantir has secured. But one of the things about the company is that even though it was born from defense contracts, it is now selling more to the private sector as a percent of total sales than, of course, the public sector. And so I think that's quite meaningful, even if there's some additional Department of Defense cuts. There's also some potential contract acquisitions that Palantir may end up securing, particularly in the government payment systems for the Department of Defense. So they're actually deploying their technologies to improve efficiencies for the government and the Department of Defense, and that might be another catalyst. And this is a couple of points that essentially William Blair has brought forth, irrespective of the fact that the valuation of Palantir is still quite rich at over 100 times, 2026 earnings per share. The company, or William Blair, which does now have an outperform rating on the stock for market perform, they didn't initiate a price target, but they actually see the valuation as justified because of the fact that this is a company that has got an AI premium with 30+% top line sales growth and efficiencies with operating margins around 45%. The other thing they pointed out, and I think this is interesting, is that even though sales are higher by about 50% over the past 2 years, cumulatively, their total expenses for personnel has only increased by 3%. So Palantir has been growing, but they've been growing efficiently, and obviously the stock price has reflected that.
It's interesting how they talk about the potential of a government shutdown on March 15th. I mean, that always ends up being a lot of political theater, but it really is something people watch closely because it could put downside pressure on a name like Palantir or anything else for that matter. Assuming they figure it out like they most often do. Tell us about an example trade.
Yeah, so look, I think there's potential for downside pressure in the markets. The markets are obviously in the distribution mode. It doesn't necessarily mean we can't find or see a tradable bottom in stocks like Palantir or even the market. So what I'm going to do in this case is, because premiums are high for put options, I'm going to go out to April's monthly contract with about 43 days to expiration, and I'm going to sell basically a way out of the money put option on Palantir. So I'm going to go to the $75 put. You can actually sell that outright for about $4 in premium per share, or $400 a contract. So in essence, we get flexibility here. This is essentially a bullish to neutral trade, but the stock could even fall about 16% from the approximate levels of $85 right here before we even achieve break even. And the yield, that premium of $4 relative to the strike price, is about 3.5%. So it's got a positive yield to the strike price, flexibility with the stock potentially could move down 16% from here and still achieve break even, which is basically $71. So if the stock trades at 75 or higher, that's great. That's essentially our objective here because that premium will roll to zero.
Right, understood. George Tsilis, great to see you. Thank you so much.